You're watching Traders Morning Setups with Dex the Algo Capitalist. Dex created his pulse wave price trigger reports over 2 decades ago, and he's been using them to ride the pulse waves as a full-time trader ever since. Find out more about Dex's reports and sign up for our next webinar to learn how to use them at pulsewavetrading.com.
All right, ladies and gentlemen, we are back with our morning show here with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from pulsewavetrading.com, home of the world famous pulse wave price trigger reports. All right, let's jump right into things. So you got the overnight markets here. You got the US dollar index, and right now it's up about 4 pips at 104.50. You have the euro off 13 pips at 107.48. And we got the pound sterling up 25 pips at 125.62. And the AUDUSD up 11 pips at 65.01. Bitcoin futures up 520, trading at 43,075. And we have a bullish 2-bar Charlie setup on your Bitcoin futures this morning. So we expect an all-day up day and for Bitcoin to finish in the green. Looking at the Ethereum futures, it's up 49.5, trading at $2,349. We have crude oil futures at 51 cents, trading at $73.29 per barrel. Nat Gas up 6 cents at $2.02. We have gold futures up $2.60, trading at $2,045.50 an ounce. Silver unchanged at $22.42 per ounce. Copper about flat, trading at $3.78. Dow futures up 18 points at 38,484. We have the E-mini S&P 500 futures up 8.5 points at 49.70. E-mini S&P 500 futures up 47.75 points at 17,747.25. Russell My Hustle is down 1.9 points at 1941.9. Soybean futures up big, up 7 cents at $12.03 per bushel, trading at just around the highs of the session. We have corn futures are up a penny, and they're trading at $4.44 a bushel, trading right around the highs of the session as well. And we have a bullish 2-bar Charlie set up this morning on corn futures, so we expect an all-day up day and for the market to finish in the green. We have wheat futures up a penny, trading at $5.92 per bushel. All right. Yeah, I see you in the live. Yes, we're gonna get to that. We got a special chart segment coming up. We got you covered. We're gonna take a look at that. That's already queued up for you. So I'll tell you what. Let's do this. Since you brought it up, taking me all up out of my flow and everything. Since you're gonna do it like that, let me just see here. What I got for you. Let me see what I got for you. I will go ahead and hit you up with that real quick. I see that there's some news on that as well. So let's go ahead and do that. I'll change the screen right here and I'll hook you up so you can see what's going on with your XRP Ripple. All right. So as you can see, if you are a member to the Pulse Wave Reports, you received your report last night letting you know that coming into today, you're still under the auspices of a rally alert, and we expect higher prices. All right, sideways to slightly higher prices. We have a bullish trend momentum reading here. Our initial upside target is the bottom of the Kumo cloud at 60 cents. Okay, so that's been kind of the median, if you will. Instead of having a normal range bar, which is a parabolic bar that sets the range for the security, sort of like this bar here. We have something a little bit different. We have this bar, yes, but we also have the bottom of the Kumo cloud acting as a consolidation level as well. If you notice, the price action as it's locked and consolidated, it keeps coming back to this. All right, and then it goes no further. So that's kind of what's going on here. So you have this bar here from January that has been keeping the price action in it. Now the price action is starting to come down and expand the range, but keeping sure not to take out the 46 cents key support zone from back here. All right, so you're still sideways. You still have a bullish environment, but right now you've been moving sideways for a long time, and now the market is trying to put in a bottom where it can rally from, like it did back here. You have 1, 2, 3 key points before it took off. So you just had your first one here. All right, so you're only one in now. These rally alerts can lead the market up to 3 to 5 days. All right, so you're under that auspices right now. So the things to look out for, which the reports have this information on there too, you got a support area here. You don't want to see the 46 cents taken out. All right, you don't want to see that taken out, especially on the close. All right, and you're going to 60. So where you are now, you got a 10-cent run that you're looking for out of this rally alert. Just keep in mind too, when you're at key support areas, which you are technically at now, because this also is a support zone, this 49.51 is a key support zone right now as well. So you want to see that maintained. So you could get a triple bounce like you did back here. And actually, this is a quad bounce because you have 1, 2, 3, 4 tests before takeoff. And like I said, you're just in one. So we're going to get a repeat of this, then you can expect that. But still, that 60 cents is your upside initial target on that particular move. And since we're here, we'll stay here. All right, here's your ZEC or Zcash. And you can see that this one is in a locked-in bear market. We say locked in because you have your bearish trend momentum reading, and the market is trading below the Kumo cloud as well. And so what's in play now is the prior 52-week lows. That's what's in play right now. So we're expecting lower prices and for the market to test and or take out the prior 52-week lows. All right, next we got wheat. Now, wheat futures, as you can see, it consolidates and congests and moves sideways for a long time. That's kind of the way this market moves. It has to have some type of cover story or event to get a big, humongous trend going. But this one's been in a bear market forever, and we really haven't had a real bear market rally except for back here. All right. And then it couldn't maintain and it gave it all back. So yeah, this is right here. This is not a bear market rally. This is just a technical bounce off the 52-week lows. That's it. All right. All right. Next, we have soybeans. Soybeans traditionally are a tradable vehicle as it mimics the S&P 500. So you can actually, back in the day anyway, this was a day tradable vehicle, and you could actually do pretty well. But as you can see, this is in a locked-in bear market as well. That's why you see prices continually hitting new 52-week lows. So until this downward spiral exhausts itself, you can expect more downside. Next, we have corn. Corn is also been in a locked-in bear market, but something has changed. We now have a bullish trend momentum reading off of a rally alert from back here. Then we got a positive bot check a couple of days ago. So we're anticipating that this market's going to make a run back up here toward the 465 level. Okay. So between 453 and 465, that's the that's your initial upside target area for this bear market rally in corn. Now, as far as silver, silver is still has a bullish trend momentum reading, but it's been still experiencing that weakness because of the bearish algo shift, hence the little purple arrows right here. Okay, so these downward facing purple arrows is your bearish algo shift, which provides pressure. It's a counter trend measure. All right, so there's selling happening, and that's making the prices come down and threatening to test and take out the support zone of $22.13. If that happens, the market goes into free fall, and you won't have another support area until you get down here to $20.82. So you're looking at the potential of a $2 drop that you're facing coming in your silver. All right. I know it's in a bull market complexion, but it's not trending. It's sideways. The price action is still the same as it was back in April of 23. So if you had a Rip Van Winkle event where you got in the market on this day here in April the 3rd of 2023, and you woke up today, the price is still the same price it was at the day you bought it a year ago. All right. So that's dead money. That means this market isn't doing anything for you. As a trading vehicle, you could have traded, short up here with these crash alerts, bought at these rally alerts, and done okay. But it would have took a lot of work on your part. You would have had to constantly be getting in and out of the market and placing your orders. And some people don't have that kind of time. So as an investment, it's not doing anything for you. It's maintaining. Now, if this was a dividend paying security, this would be great, because the dividend paying security, you don't want it to really move. You don't want it to move down, but you don't care if it moves up too much either. You just want to get your dividends. You're really just in the position for the income. If you get price appreciation on top of that, that's a plus. It's a bonus, but you're in it for the dividend. This is not giving you any dividend, and it just held your money, and your money hasn't gone anywhere in a year, and you're not getting a dividend either. So not cool. All right. Here is Nat Gas, and we came into today with a rally alert. So the upside target is right here at $3.12. All right, and that's your Nat Gas. All right, I see you want to take a look at Mara, so let's pull that up for you real quick. All right, so Marathon Digital Holdings is on the NASDAQ, and we'll get this chart up for you here. All right, so this one you can see is in a bull market as well, but it is in a pretty decent correction at the moment. And the question is it going to be any more technical damage on this chart? Right now, it's gunning for the support zone right here. You don't want to see this taken out, okay? If so, then your next one is right here at $14.15, then at $8.35, and then right here. So after that, I mean, you've pretty much given up everything. It's 100% retracement. And right now, you're getting pretty decent now. So you will want to see if this bull market has any energy left in it. You would like to see that this is gonna do something. One thing to note is the flip-floppage up here. All right, that's usually a signal that something big is happening. And the last signal you got was a crash alert, and you got downside production yesterday. So this here is a telltale sign. What you need to see is for the market to get back above this Kumo cloud, and that's going to take some doing. If you are a subscriber to the post-trade report, you would have already gotten stopped out up here and taken your profit. And you would either be on the sidelines right now, or you would have been shorting. So, and most people just stay on the sidelines until the next buy signal. And that's what you're playing at right now. So this one, you should be out of longs at the moment until the next buy signal on Marathon Holdings. All right, and let's see here. We did the Nat Gas. Okay, next we got the Dow Futures. So the Dow Futures gave us a crash alert last night for today's trading. So we're going to be watching the Dow to see if we get any downside production on that. If we do, right here at the top of the Kumo cloud is our downside objective, which is at the 37,200 level. All right, so that's quite the pullback, which is needed, and that's really nothing because you haven't had a correction. You've had little pullbacks, but you haven't had corrections. All right, so this is key right now, and this is what we're looking at. We're looking to see, is the market going to, take this out? What is it going to do? Next, we got the NASDAQ 100. Now, it's all kind of messy up here. All right. You got a bearish trend momentum reading, and the market is sideways right now. All right. If this support right here is taken out at 17,240, then the top of the Kumo cloud at 16,690 comes into play. And that's what we're looking for. So we are expecting downside production here in your NASDAQ 100. Next, we got gold. Gold is just stuck. You're in a bull trend, but the market's not trending. You have a bearish trend momentum reading, so you have sideways to lower prices expected, especially as it's looking like it's threatening to fall outside of the Kumo cloud and then go into a free fall status. So we'll see what happens as the cloud is narrowing up at these levels. The market's getting dangerously close to getting into a free fall status. That could give a sell signal to a lot of the machines. So you want to be aware of that. Now, can the trend come in and reclaim the price action at any moment? Of course it can, but that will take some doing. And right now, we don't have a real story behind the market to make that happen. S&P 500, we have a crash alert based on yesterday's close. So we're looking for confirmation of this with a downside production. And the top of the Kumo cloud here at 47.42 is the initial downside target if we get that confirmation. Next, we have crude oil, which is still in a locked-in bear market, and we're expecting lower prices there. Next, we have the euro. We came into today with a crash alert, so beware of that, as the euro is now threatening to go into a free fall status. All right, red alert there. Pound sterling is now right here in the center of the Kumo cloud. It's not in a free fall status unless and until it takes out 124.09. Next, we have the Aussie, which is in a bear market with a bullish trend momentum reading. And we came into, as of yesterday's close, we're still under the auspices of this positive bot check. Even though we have a bearish algo shift reading based on yesterday's close, this market still has the potential to get back up to the 65.84 level and then build momentum to get back in the cloud and come back and test the 67 range. So this one is a catch 22. We could head lower because you are in a bear market, but because of the bullish trend momentum reading, it should keep prices elevated and move sideways with a little elevated drift. So we'll watch this one to see which way it goes. Then you got the Russell. The Russell has a bearish trend momentum reading, and you've been moving sideways with a downward bearish bias. And the bottom of the Kumo cloud at 1868 is the downside target on this correction. All right, copper, bearish trend momentum reading. So this is a market that is in a correction as well, but it's consolidating, but we have a crash alert coming into today, so beware of that. US dollar index powering up. We have a rally alert coming into today from last night. We got a bullish trend momentum reading, and the price action has pushed itself back above the Kumo cloud, which is very bullish, which means that this bear market rally is now official. And where we go from here, I still say 108 is in the future cards for the US dollar index. Ethereum futures bullish trend momentum reading. You're in a locked-in bull market, so we're expecting upside here. And we had a rally alert coming into today as well. Today will be day 2 of the rally alert, so we expect more upside to come. Looking at Bitcoin futures, a little bit different. We got a bearish trend momentum reading here. All right, so this bull market is kind of taking a breather. It had a correction, came off that correction, and then topped itself out. So this one, even though it's above the Kumo cloud, it doesn't have the momentum behind it. So it could still break either way. The trend can reclaim the price action and push prices back higher and relock in and start trending back up toward 50. Or it could break down and come back down here and test the support down here inside the Kumo cloud. So this one is very interesting to see which way it goes. All right, so that is our chart segment that we put forward today, doing something special for you because we care. That's right, we care. All right, so I did something different. All right, now let's get into the market news of the day that you should be aware of. All right, so Gen Z is skirting professional advisors for TikTokers. The startups focused on financial tech that venture capitalists are most excited about, and why Travis Kelce is teaming up with one of the biggest credit bureaus in the U.S. But first, the market sweet spot. So forget about a soft landing. Some market watchers want something just right. For months, investors hoped the Fed's tightening policy would culminate in a soft landing, lowering inflation while avoiding a full-blown recession. The U.S. is nearly there. Most experts believe the Fed will stick the landing as a stream of strong economic data continues to pour in. But why settle for a soft landing when you can get it all? A so-called Goldilocks economy where growth remains high while inflation and unemployment stay low is a possibility some market watchers are floating. Cooling inflation and a strong jobs report means the Fed has the green light to get more aggressive with its rate cuts. Now, here's the thing about that, though. I don't see that happening, and I talked about that yesterday. The result would be the S&P surging to 5,300 by the end of this year, and that will, have it finishing up over 11% on the year. The reason why I don't see any immediate rate cuts coming, and I touched on this yesterday, is because the bond market has been doing the job of the Fed, so they haven't had to do anything. Remember, the higher the bond prices go, the lower interest rates fall. It's an inverse relationship. So since the bond prices have stopped declining, the Fed is not in a hurry to cut rates. Doesn't have to. The market's working it out on its own. See what happens when you let the free market work without intervention? See what happens when you allow for price discovery? It's not all bad, Mr. Fed President. Let them leave the markets alone and let them do what they're going to do. Now, a Goldilocks economy still hinges on the Fed cutting rates, which has proved fleeting for investors based on what I just told you. But Fed Chairman Jerome Powell crushed investors' dream of a March rate cut last week, a point he seemed to reiterate on 60 Minutes. The chance of a March rate cut went from 50% last week to about 16% on Monday, according to the CME FedWatch tool. Not to be deterred, the market still believes we'll see the cuts it's been dying for and more than the central bank currently anticipates. It's banking on the Fed being wrong, but ultimately seeing the error of its ways and accelerating cuts later this year. The market has priced in 6 rate cuts for the year, despite Powell's already signaling the central bank was planning for just 3. That suggests it foresees the Fed making a policy error, Bank of America analyst wrote in a note on Friday. To be sure, it feels a bit like we're moving the goalposts. Powell has been unwavering in trying to snuff out any chance of inflation roaring back. Bank collapsed because they didn't manage their interest rate risk, and that still didn't stop Powell from raising rates another 3 times. And this is in the face of banks collapsing. So to suggest he'll take an aggressive approach to cutting rates after being so cautious seems a bit optimistic and unrealistic, in my opinion. That's not to say there's no chance of the Fed exceeding its 3 rate cut prediction this year. Harvard economist Kenneth Rogoff said last month the central bank could cut the rate 15 times if a deep recession is triggered. Now, one of the hottest stocks in the market still has room to grow. Goldman says share prices of AI darling Nvidia have a potential 21% upside, according to Goldman Sachs. The bank is feeling bullish thanks to early evidence of AI monetization and talk of increased investment in AI by companies, among other reasons. How things could go wrong for the stock market. Despite being bullish on stocks, B of A equity strategists still outlined some big potential risks to investors. Weak demand and layoff news were some headwinds that gave pause. Gen Z is turning to influencers to help with its finances. A new survey found young people look to TikTok and YouTube over professional advisors for help with their money. A demand for long form content and young people's distrust of traditional players has led to the trend. But I have to say, let's keep it 100. Wall Street is not for young people, traditionally speaking, especially Gen Z people. If you are young and your net worth is below $10 million, you're not getting any Wall Street people to talk to you. Let's just keep it 100. I remember there was a famous situation back in the 1990s when the one of the what do you call it heirs, one of the, I think it was DuPont, one of the DuPont heirs, he had received their $10 million inheritance and went to Wall Street looking for financial advice, and they laughed at him on the phone. They literally laughed at him on the phone and said, "Oh, you poor guy. I know you think you have some money because you got $10 million, but actually you don't have any money. We only work with people with a net worth of at least 100 million and up. So we don't know what to tell you, but we can't help you." So he was funneled to a lower ranked type of a financial advisor who makes about $60,000 a year, who works with middle income people, middle class people. Exactly. So that's why the young people have a sour taste in their mouth. And let's not forget how Wall Street has burned people time and time again throughout the decades with lying to them, telling them buy and hold. Remember, as Bear Stearns was collapsing, well, you loved it at this price, you'll love it at the lower price. Remember Enron? They kept telling people to buy. They kept issuing buy ratings as the company was imploding. Well, that's why they distrust you, Wall Street. Fintechs could still soar in 2024, while venture funding to financial technology startups fell by 50% in 2023 from 2022. VC still sees a handful of bright spots. Investors said that areas like generative AI and payroll providers could take off this year. That's a joke as far as the payroll provider thing, with the tens of millions of layoffs that are still yet to come and that have already taken place. I think I see payroll companies going out of business or being consolidated and absorbed into larger companies. Chat GPT should be much less lazy now. In a post that was made on X by Sam Altman, he said an update would fix Chat GPT's refusal to complete some tasks, and users had been complaining the bot was slacking off and sometimes even issuing sassy responses. That's rich. Can you imagine getting a sassy response from a bot? You ask it a question like, what's the weather today? And it says, I don't know, look outside. Something like that. That's crazy. All right, a Salesforce executive suggests workers who didn't hit a training goal could see financial repercussions. The company set a 2023 goal for all employees to achieve the Ranger status on its training platform. A leaked email showed the exec telling staff they better get going if they want their stock grant and bonus. Travis Kelsey wants you to check your credit score. The Kansas City Chiefs tight end has partnered with Experian on a new ad campaign encouraging people to check their credit scores. It's probably a better deal for Experian than for consumers. Yeah, right. The U.S. Treasury will send officials to China this week. The New York Times reported that an envoy of department officials is heading to China to help iron out economic tensions between the two countries. EVs just aren't working. A reliance upon high priced luxury EVs fell apart in recent months, and automakers are going back to the drawing board. And now it seems like hybrids are back in favor. I got to tell you, for the foreseeable future, it's all about the hybrid because there's just not the infrastructure for 100% EV. You're gonna need the hybrid. Seriously, if you thinking about taking a road trip to out of town, yeah, you're gonna need a hybrid. All right, it's just a fact of life. Until the infrastructure is built, which it has not, that's how it's going to be. All right, in other news, King Charles diagnosed with cancer shortly after undergoing a prostate procedure. Notice that I'm not telling you what cancer he has, um, and that's kind of sus, in my opinion, as well. Indie musicians are celebrating UMG's decision to pull its music off TikTok. It's our time to shine, baby. Yeah, whatever. Why fans think Taylor Swift snubbed Celine Dion at the 2024 Grammys? It's all theater, popcorn, and peanuts for you guys. Ukraine is so desperate for arms, it's itching to get its hands on Canada's 83,000 decommissioned rockets. Snap's new mass layoffs hit teams across tech, trust and safety, and internal analytics team aiding DEI efforts. Well, think about it. This is just the beginning of layoffs, folks. You ain't seen nothing yet. Exclusive healthcare staffing startup Nomad Health just cut more staff. Its third layoff in a year. Like I said, you haven't seen the layoffs yet, but they're coming. A stripper and escort who caters to Wall Street clients says she has invested more than $57,000 in cosmetic treatment. And here's what's happening today. Earnings, Snap, Spotify, and UBS, among others. And the FAA administrator will testify to the House Transportation Subcommittee after January's Boeing 737 MAX blowout. Whatever. All right, folks, that's our show for this morning. Hopefully, you got something out of it and that you were entertained. And hit that like button. Subscribe if you haven't already so you can be kept up to date with our latest. And remember, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And on that note, I'm out. Peace.